Ladies and gentlemen, we move on to the next panel discussion. And I would like to call the panelists on stage. We start with Srimati Rupa Dutta, Economic Advisor, Ministry of Commerce and Industry, as our first panelist. आपकी जोरदार तालियों के साथ श्रीमती रूपा दत्ता, इकोनॉमिक एडवाइजर, मिनिस्ट्री ऑफ कॉमर्स एंड इंडस्ट्री. Next, I'd like to call as panelist Mr. Somasundaram PR, MD, India World Gold Council, to kindly come upon the stage. Our next panelist is Sri K.V. Tirumala, Deputy DGFT. The next panelist I'd like to call is Mr. Prakash Chandra Pincha, who is a representative from the trade. As a panel moderator, I'd like to call Mr. Rajesh Khosla, Chairman Emeritus MMTC-PAMP, please. लेडीज़ एंड जेंटलमैन, देवियों सज्जनों, आप सभी लोगों से एक छोटी सी विनती भी है. आपके जो भी सवाल हैं, कृपया ऐसा ना सोचें कि उनको तवज्जो नहीं दी जाएगी. प्लीज़ आप अपने सवाल ज़रूर शांतिप्रिय तरीके से रखें और ऑफलाइन या ऑनलाइन उन्हें ज़रूर सुना जाएगा और ध्यान में रखा जाएगा. धन्यवाद. I request Mr. Rajesh Khosla, who is our panel moderator, to sir kindly proceed. Thank you.
Good evening. I know it's late and everybody wants to have dinner, but bear with us for about half an hour or so. There's a vacant seat next to me. Madam's here. Absolutely. So, when we look at gold policy, any policy must integrate with the economy of the country. You simply cannot have a policy which does not integrate with India's economy. That's the first given. We may ask for whatever we want, but if it does not integrate with the rest of the country and the economy, it's not going to happen. So let's look at how regulators see this. There's a huge demand for gold because, ladies particularly will buy it. It's safe value. You can redeem it for cash whenever you want. It's the best investment. Therefore, the demand goes up. You need to make gold available. Because of the demand, there's very large employment because the entire jewelry industry is there to service this demand for gold in the form of gold jewelry. So when you look at these two things, the only thing that comes to mind is it's an asset class. And everybody likes it. However, there is a flip side to the coin. And the flip side is India doesn't produce gold. And every piece of gold or every ton of gold that we need, with the exception of 1.5 tons that Hatti Gold Mines does, needs to be imported, needs to be paid for in scarce foreign exchange. That's one problem. The second problem is that by and large, and I know there are many jewelers here, the industry is in the unorganized sector. And because it is in the unorganized sector, tax compliance is the exception and not the rule. When you look at these two things, then the regulator says, but wait a minute, gold is a non-essential good. So you have this contrast between asset class on one side and the non-asset or the non-essential nature in the way we practice the business. Then we compare ourselves with China, and he says, but when in China we do all these things, China produces 500 tons of gold and increasing. domestic production. China has 9 good delivery refineries. Therefore, trust, credibility, assurance, all of those are addressed. We don't produce gold. However, we have gold. I keep on saying that we are the largest gold mine in the world. And the good thing about us is we are the largest above ground mine in the world. And that is the 25,000 tons of gold that Somasundaram also agrees is what households have. And if you look at mining, I can show you reports which say that if we develop gold mining in India, we will be able to service about 200 tons of gold every year. Therefore, a policy maker, as distinct from the practitioner, says, I need to make gold available without having to import it. So I need to look at this 25,000 tons, and therefore I need to look at gold monetization scheme. There have been some attempts, and rest assured there will be some more attempts to get this gold out. And if those attempts don't succeed, then I'm afraid you will see a very heavy hand. Because या तो आप शराफत से मानो या आप डंडे से मानो, आप सोच लो आप किस तरीके से मानोगे. As simple as that. So, given this dilemma that a policy maker faces, we in industry need to figure out, within these limitations, what is it that is best, first for India, second for us, and not the other way around. Not what is best for me and to hell with the country. It doesn't work that way. So these are my kind of opening comments, and I will try and lead the panelists into how they see things. I will defer to Mrs. Dutta, and I will sort of take a last, absolutely, because let's see what the others say. So, Mr. Pincha, as one of the leading practitioners of gold jewelry in the country, and when you see this reality of the economic conundrum in which we are,
of course,
how would you see it?
Of course, this is the crux of the issue, but I see it from a little different perspective. Apart from whether the government is going to make it asset class or not, gold jewelry is being purchased by Indian masses out of social compulsions more than out of asset class point of view. I tell you why. Because if you go to the rural areas or whether to the class 1 cities, class 2 cities, class 3 cities, the maximum sale constitutes of the wedding purchases. And there are rural social compulsions, you cannot avoid it. You cannot change it by laws also. If government wants to control the quantum of gold imported, may I suggest, Madam Dutta is sitting here from Finance Ministry, the lawmakers are there, DGFT is here. How much import of gold has increased in last 50 years, if you compare it? When I came into business, I used to hear that 1,000 tons of gold is finding into grey market through smuggling channels, because those were the times of gold control, and gold was prohibited commodity. Later on, the advent of the electronics and the gadgets in the households, the purchasing of gold has been diverted to that side. Still today we are not 1,000 ton economy, we are not consuming 1,000 ton. It is around 600 to 700 tons, these are the estimates, am I right? So we have not increased per capita consumption of gold. But gold should be, as Mr. Somasundaram rightly told, that it is predominantly handcrafted industry and it is a cottage industry. You don't need any training institute or formal universities to teach the craftsmen the craftsmanship. The craftsmanship is already there, and from father to son, son to grandson, it is being passed over, and it is creating generating huge employment and supporting the industry. So, as Mr. Khosla is telling that there are compulsions with the government, we must appreciate that, and I do appreciate. But government should also simultaneously appreciate the social compulsions which lead to buying of jewelry. And if you feel that by, as Morarji Desai tried to do it, it could not be contained. Gold Control Act, after 28 years, it came into the senses of the government that let us abrogate it. So the folly was realized. But now if we go back again to that time, then we might be producing again the Karim Lalas and all this. Yeah.
I will just, because we need to get more people involved.
Thank you.
in this.
I'm sorry.
Great views. How do you change habits? The sovereign gold bond was one attempt of the government to try and persuade the Indian national that you can invest in gold without investing in the physical. I can give you exactly the same thing in the form of a sovereign gold bond. However, what may be true 30, 40, 50 years is not necessarily true today. And what is true today will not be true tomorrow. Let's be clear on that. So we've got a bit of an impossible task. We have an impossible task of how do I continue to make gold available, simultaneously trying to progressively remove the fixation we have for keeping gold with us. And how do I encourage you to partially dispense with the gold you have, because to the extent you dispense with the gold you have, I will need to import less. So this one is for you. I know that as World Gold Council, we'd like to propagate the use of gold, and we'd like to encourage the use of gold. But given the reality of India and given what we've just been talking about, would it be relevant to say that going forward, we're going to focus more and more on this massive above ground stock that we have and integrate that into the economy rather than spending hard-earned dollars to import gold? Because honestly, I don't see exports of jewelry increasing so dramatically that the foreign exchange earnings there will offset the money you need to pay for imported gold. For the simple reason that, gentlemen, the value addition in plain gold jewelry export is 2.5%, 3%. So you will have to do a hell of a lot of export if you want to earn enough dollars. To you, Som.
Yeah. First of all, definitely we are not expecting 20,000 tons to come on board. That is, that's not what it is. We also know, given the India's social and economic context, gold, assuming that people will change the habits, is a little, this thing. I'm just reading a book which said, even in 77 AD, it was said India is the sink of the precious metal. The Romans were worried that they are eating too many spices and the gold is going to India, South India. So it is there in our culture. It's not going to change readily. So that is not there. Same time, is 25,000 tons is not, the issue is we talk extremes when we talk of GMS. What we are saying is India's recycling is hardly 10% of the demand, generally.
Right.
Globally, recycling accounts for 25 to 30% of the supply. India should achieve that level at least, which means about 200 tons should be recycled every year. And now that in a sink of 25,000 tons is neither disruptive nor is it unrealistic.
Can I just take you on recycling? We have a lot of industry practitioners here. Recycling is good. You're turning around gold. Recycling is not good because I would say that 80 to 85% of the gold that is recycled evades tax, is settled for in cash, and therefore does not contribute to the economy of the country. Therefore, when you address the issue of recycling, it's for industry to stand up and say, I wish to be tax compliant. And what's your take on that, sir?
Yes, I was just coming, absolutely, Rajesh, and you and I have discussed this with several people. You see, the government's problem is, as I understand, is not just about the gold demand. In fact, it has come down and they are still, saying, why can't we improve? The issue is exactly what Alistair started off and we all discussed, trust. Trust in various fronts. Now, this industry is vulnerable now because, and we saw that one small change on hallmarking, after so many years, we are still not ready. We have dichotomous voices. So the moment we speak about, even I took this thing from you, we are talking about Gold Control Act. We think, oh, gold is going to be stopped. Because in our mind, deepest mind, we still believe that maybe we don't have the infrastructure. So my point here is, it is not purely about the total demand. It is about creating trust, creating infrastructure, and telling the government that there are a few things we can do well.
So if I put on a policymaker's hat, I want to be the devil's advocate over here. I would expect that you as industry, collectively, would come to me and say, listen, while you debate the pros and cons of asset class or not good for you and so on and so forth, here is a list of things that I can do on my own. I don't need to wait for a gold policy. I need to come to you and demonstrate to you, this is how I am establishing credibility. This is how I am establishing trust. When I come to you with it and I evidence to you that yes, collectively as industry I have done so, then the policymaker will forget about the import significance, he'll forget about the dollars, he'll say, hey, these people are serious. They've actually done certain things on their own, and now let me see how much more I can do for them. So the message really is, it's for industry to do what it can, rather than for industry to complain about what somebody else could do. And I don't know if that's your view on this.
Just talk for 2 minutes before I pass on the mic to Tirumala. I think you all know that the Department of Economic Affairs, whose remit it is to go in for a comprehensive gold policy, and they have had a series of discussions, and I think most of you were brought on board as stakeholders in the on that platform, and everyone's views were taken. And while there is already a scheme for monetization of gold as an asset class, which probably needs many more changes before it becomes effective. So there are, let these things get fructified a bit, but a lot of people have been consulted, and there's a lot of work going on to ensure that gold, we import about 800 to 900 tons of gold every year. It's a, excuse me, maybe there's some slight reduction in terms of quantity in recent times, but so we'll need to wind up quickly. But this 25,000 tons of gold, as Som is saying, not everything can come out, but we need to build a conducive environment with the right kind of policy measures, with the right kind of, hallmarking centers, assaying centers. When people bring out their gold, how do you value that? How do you monetize that? How do you ensure that when they return, take it back after a lock-in period of few years? So these are some of the issues which are being tackled on a priority basis. And I'm sure we'll see some positive actions on this front. And for this, like I have said, there have been series of consultations. A lot of people are involved, but we would also like a lot much more cooperation from stakeholders as and when such policy measures are implemented in practice. Thank you.
Mr. Tirumala, I'm going to sort of limit this to those 4 letters, DGFT. Now, we all know that you're in the midst of coming out with a new EXIM policy. And there are many exporters here, and they all look forward to a more pragmatic, a more proactive EXIM policy. And I know that you may not be able to disclose a lot of what you have in mind because, it's not yet out. But to the extent you could share your views as to how you in DGFT see your ability to promote exports by a more, what shall I say, user-friendly, I'm not saying it's not, but by a more user-friendly DGFT EXIM policy. That's the question to you.
Yeah. Thanks for that nice comment saying that more user-friendly. So DGFT, as you know, it's like when it comes to the policy, it's the nuts and bolts of gold import policy is made at DGFT. Now that being the case, having said that, I must say that in recent days, if you have noticed, we have come up with a couple of measures which has actually helped. The replenishment scheme, which was almost defunct for last 1.5 to 2 years, that has been now resurrected. We have given a clarification of value addition. So if you look at it, how did all these things come about? It came about because there were enough number of representations coming. There were enough number of consultative meetings that were going on. GJEPC was always there. And through these consultative mechanisms, rather than prescriptive mechanisms, we could come up with these kind of proactive policies. Now, if you look at the new EXIM policy that we are talking about, that's going to be probably launched on 1st April 2020, we are again looking for comments coming from the stakeholders. So unless these comments come, and unless you tell where exactly the shoe is pinching, it's very difficult for policymakers who probably are not jewelry exporters to actually come about and say, okay, here is what the tweak should be coming about. So we expect a lot of inputs from you. We expect a lot of input from GJEPC side. So gone are the days when it was more like prescriptive and we say that, okay, we'll not allow the gold imports to come in or we'll control the gold. Probably forget about the blip that happened in 13-14 of the 2080 thing. But other than that, if you see, government is very accommodative, especially when it comes to the part where we are talking about the majority of jewelry exporters. There we want to support because we are talking about employment here. And that's the goal when it comes to the new EXIM policies that we are talking about. So certainly, as Sir said, we are trying to prove ourselves more useful to you. Please come ahead and give us your suggestions and we'll see how that can be accommodated. Thank you.
So that's a most reassuring statement for the exporters. If you have problems, please come to DGFT. And now you have Mr. Tirumala, and what he's saying is, come make my life miserable and I'll see what I can do to help you.
Yeah, kind of.
So I need to push this to you because we talk about promoting exports and the need to push exports and value addition. How do you see the regulatory policy framework that governs exports of jewelry from India? As World Gold Council, how do you see it?
It is restrictive because it doesn't allow export of bars. I mean, the value addition is high. We haven't fully leveraged gift in that sense. You and I have spoken about a couple of things that we could do using gift. But again, it is not that it is restrictive. That is where we are saying, you see, policy is not control. Policy is, development. We need to go back to the government with a single voice and say, can we do this? These are the risks. We will take care of it. I don't see that coming through. if you look at even globally, LIBOR, when it got into trouble, the regulators were unhappy. How did it get sorted? By the industry coming together with the FMSB, financial market. Same thing happened with FX. Industry, the bankers sit around and tell the regulator, don't worry, we understand something went wrong. You know what? We are going to come out with it. Now, we are a mature industry. We're not, so we got to get back to the government to say, oh, if we do these things, we will be able to increase exports. I still believe, again, like exports, we don't believe you can make $40 billion. That's not possible. But can the $4.5, $5 billion, without the round tripping, etc., really increase to $8, $10 billion? I think India has got the ability to do that. And we need infrastructure for it, but for that, the discussions have to be a lot more within rather than outside.